Hey guys, welcome back to the Encrypted Capital Recap for Friday, January 8th. Bitcoin just broke $41,000, up 6.58% in the last 24 hours, up 40% for the week. Ethereum also looking really good, up 65% for the week. And XRP up 32% for the week. It's down about 7% for the day. So let's go ahead. We'll take a look at the Bitcoin chart here. A couple minor pullbacks, but nothing too crazy. Did notice that Coinbase was having some issues yesterday, as well as Binance and a couple other of the exchanges. It looks like Coinbase is back online after experiencing connectivity issues. So the homepage of leading cryptocurrency exchange Coinbase is now back up after having been inaccessible for hours due to connectivity issues on both the website and mobile app. So that appeared on the company's status page Wednesday. 6 hours after it rose, Coinbase marked the connectivity issue as resolved per its status page. However, Coinbase added another incident notice later that day. So they were citing delays with Stellar withdrawals, and the XRP fork has soared nearly 60% in the last 24 hours. Bitstamp also notified its users via Twitter that the exchange is currently experiencing some delays processing crypto withdrawals. Also noticed that with Binance and a couple other of the exchanges. So yeah, it seems like whenever there's a lot of volatility in the market and when Bitcoin's breaking new highs, for some reason, Coinbase and Binance and some of the other big players really have trouble staying online, preventing people from trading and withdrawing their assets. So in other Coinbase news, Coinbase acquires crypto trade execution startup Routefire. So Coinbase has acquired Routefire for an undisclosed sum. They announced on Thursday saying that it will cease its services and join Coinbase to continue developing execution services for digital assets. So they were founded in 2017, and the San Francisco-based Routefire claims to have the best technology to help institutional customers fill large orders at high speed and lower fees. And Coinbase and Routefire will expand the exchange's prime brokerage business. So Coinbase has already helped mega Bitcoin buyers like MicroStrategy and One River Digital execute large trades. And Routefire is Coinbase's first acquisition of 2021, and it comes when Bitcoin is obviously trading around $40,000 levels. And just wanted to go in, I found this, just all the companies that Coinbase has acquired here: Blockspring, Cypher, Blocker, Zappo, and a host of others. So Coinbase, if they're getting ready for their IPO, they've definitely done their work in getting as many companies under them as possible. And let's move on to other news. So Square's crypto business could generate $1 billion in profit if Bitcoin soars to $100,000, Wall Street analyst says. So Square's crypto business could generate gross profits of $1 billion, according to a Thursday note from Mizuho Securities. And even if Bitcoin falls from its current record levels, user engagement with Square's Cash App to buy and sell Bitcoin should continue to boost profits for Square. So Jack Dorsey, the CEO of Twitter and Square, has been very vocal about the crypto space and kind of aligning his companies to get involved with crypto. And he's been very vocal. I found this article. So he weighed in on the FinCEN regulations, which came out not too long ago. So it says that the Twitter and Square chief executive has given his views on the proposed FinCEN regulations. So the influential figure in the crypto space is convinced that implementing the regulations will hurt the crypto sector in the U.S. He sides with many U.S. crypto firms like Kraken that are against the new anti-money laundering laws that were recently proposed by the Financial Crimes Enforcement Network. Dorsey also argued that the regulations will likely hamper innovation in the crypto sector, and the Square chief penned a letter yesterday criticizing the regulations for pushing to enforce reporting requirements that transgress what is necessary for transactions. So yeah, basically FinCEN wants anybody involved in crypto to report all the data that they possibly can on their users, and he's pushing back on it, which is nice to see. And they only gave the FinCEN only gave, I think it was like 15 days to be able to petition what was going on with the regulations they're trying to impose. And so I found this article: 65,000 comments and counting, crypto industry fights arbitrary treasury rule. So the Financial Crimes Enforcement Network, a unit of the U.S. Treasury Department, wants crypto exchanges to collect a lot more data about individuals transferring more than $3,000 in cryptocurrencies into private wallets. And the crypto industry isn't having it. Goes on to say, as the public comment period for the controversial rule comes to a close, industry heavyweights are logging their opposition in a coordinated effort. They're trying to delay the rule's implementation until after a new presidential administration takes over, as well as raise procedural and substantive concerns. The proposed rule, industry participants contend, could drive crypto innovation outside the US and threaten the digital privacy rights of individuals and entities. So, at the time of press, 65,000 comments had been submitted, and with major fintech firms such as Square, traditional business groups including the US Chamber of Commerce, and crypto exchanges like Coinbase filing comments pushing back against the proposed rules, US lawmakers have also weighed in, asking the Treasury Department to at least slow down and engage with the industry before implementing any strict KYC rules on counterparties. So it goes on to say that under the proposed FinCEN rule unveiled late last month, exchanges would have to collect names and home addresses for the owners of private crypto wallets, also referred to as self-hosted wallets. So if any of you guys aren't a ledger, they want basically all the information from you. So receiving more than $3,000 in cryptocurrencies in aggregate in a day. So if a wallet receives more than $10,000, the exchange would be required to file a currency transaction report to FinCEN. So this basically goes against everything that crypto stands for. And I'm glad to see that some of these guys are pushing back. It seems like they're really trying to just sneak this in here. So hopefully with the signatures that were generated, 65,000, maybe that'll get a response from them and maybe it'll delay it or maybe abolish it altogether. But the way FinCEN works, who knows how that's going to turn out. So on to the next news. Ripple tried to settle with SEC ahead of XRP suit, CEO says. So Ripple tried to settle charges of conducting unregistered securities transactions with the U.S. Securities and Exchange Commission before the federal regulator sued in December, CEO Brad Garlinghouse said Wednesday. So in a Twitter thread, Garlinghouse addressed what he described as 5 key questions about the SEC suit against Ripple. And I have that pulled up here, so we'll go to Twitter. So Garlinghouse says, I'm not going to litigate the SEC's unproven allegations on Twitter. And as you can imagine, there are new considerations to what should be said publicly after litigation process starts. However, he would like to address the question. So he goes and says, it's quite lengthy, so I'm not going to read all of it, but he goes on to say, why didn't Ripple settle with the SEC? Says he can't get into specifics, but no, we tried and will continue to try with the new administration to resolve this in a way so the XRP community can continue innovating. Consumers are protected and orderly markets are preserved. They also asked, did you pay exchanges to list XRP and when will it be relisted? It goes to say XRP is one of the most liquid top 3 to 5 digital assets globally, and 95% is traded outside the US. The US Ripple has no control over where XRP is listed, who owns it, etc. It's open source and decentralized. And I'll see if I can pick out a few more here. When are you responding to the SEC? Why are you silent? He goes on to say the legal process can be slow. Things may seem quiet, but there is plenty happening behind the scenes. We'll be filing our initial response within weeks. So yeah, you guys can go back and read the thread. It's good to see that they tried to settle with the SEC before all this happened. And I still think that there's a good chance that this will get settled out of court, and it could even be settled before the February 22nd pretrial, but that remains to be seen. All right, so we talked about Coinbase already. Let's go into Grayscale. So Grayscale holds over 3% of Bitcoin, sees pension interest. So Grayscale Investment LLC's new chief executive officer says the world's largest manager of digital assets expects increased interest from institutional investors such as pension funds and endowments to continue to fuel its rapid growth. The Grayscale Bitcoin Trust has become a bellwether for digital asset investors after accumulating more than 3% of the total supply of the largest cryptocurrency. Goes on to say that we've started to see participation not just from the hedge fund segment, which is what they've long seen participation from, but now it's recently from other institutions, pensions, and endowments. So Michael Sonnenschein, who was named successor to founder Barry Silbert on Thursday, said in an interview, the sizes of allocations that they are making are growing rapidly as well. Grayscale has 10 funds and currently manages $25 billion in assets, up from $2 billion a year ago, Sonnenschein said. So the Bitcoin Trust has seen the majority of the inflows amid a rally that pushed Bitcoin to $40,000 on Thursday for the first time. So you're seeing a asset that's already scarce like Bitcoin, and now it's getting consumed by trusts like Grayscale. owning 3% of the Bitcoin. So not only are they pulling that off the market, but they're holding that, and then they're selling other investments out of it. So it's pretty crazy to think that they own 3 out of every 100 Bitcoin. It says there's definitely an argument to be made about Grayscale and really any other vehicle that may be removing Bitcoin from circulation and putting it into a financial product, inherently increasing the scarcity of an already scarce asset. So Sonnenschein joined the New York-based Grayscale in 2014 and most recently was its managing director. So prior to Grayscale, he was an associate at JP Morgan Chase and Company and an analyst at Barclays. So these guys are basically just pulling all of the Bitcoin off the market that they can, and then they're selling products off of it. And so, if the demand is high and the Bitcoins are scarce, that should drive the price up even higher. So if you guys know who Kim.com is, he started Mega Upload a while back. And so now he's saying that his next generation content monetization service, Kim, announces Bitcoin Cash integration. So it says that .com, whose website Mega Upload was once the 13th most popular site on the internet and responsible for 4% of all internet traffic, said Kim turns digital files into file shops. Users can now use our service to package a file they want to sell into an encrypted container file, and then they can place it anywhere on the internet. So customers who want to access the content inside the encrypted container can make a payment using cryptocurrency like Bitcoin Cash. So Kim.com goes on to say that my opinion is that crypto use is on the rise and BCH is in a good position to accumulate market share. For me, it's simple. The more users you have, the more value you have. The winners in the crypto race will be decided by vendors and users. Focus on the fundamental question. What do vendors and users want? Low fees, fast transactions, high security, and ease of use. Kind of sounds like XRP. So he went on to say that Bitcoin Cash was currently undervalued and that the upside potential for those who missed the Bitcoin train is enormous. And Bitcoin.com founder and friend of .com, Roger Ver, said that .com has always been ahead of the rest of the market and that people should pay attention to his predictions. He went on further to say, when you look at interest in BTC these days, a lot of it comes in trying to chase its historic investment gains. As long as the price keeps going up, there's going to be a lot of interest. But what happens when people want to start actually using it to pay for things? They will discover the limitations of Bitcoin and look for an asset that can be both an investment and a true peer-to-peer payment system like Bitcoin was originally meant to be. So that's what Bitcoin Cash is. And Roger Ver just came out with a prediction of his own. So he said that Bitcoin Cash to hit 100K, and he's bullish on Ethereum too. So Bitcoin Cash is the third worst performing major crypto asset, and he goes on to say in 2030, it'll be worth almost 229 times its current price. And the tech entrepreneur Ver, and investor and Bitcoin Cash evangelist, said he's also bullish on Ethereum. He says the more useful something is, the more people will use it, estimating a sharp increase in Bitcoin Cash holders and users in 2021. He also keeps claiming that BCH is far more useful than Bitcoin for everything except for speculation so far. And it's funny to note that Roger Ver also owns Bitcoin.com, and obviously he slides a lot of his own Bitcoin Cash evangelizing into that website. So I always thought that was kind of funny that the owner of Bitcoin Cash does own Bitcoin.com. Ver goes on to say that he has that it does have far more potential upside as well, estimating that Bitcoin Cash might reach 100 grand by the end of this decade. According to his estimations, the price might hit $800 next year and $10,000 in 2027. To be honest, I think that Bitcoin Cash will probably end up hitting those targets a lot faster. Let's go ahead and take a look and see where Bitcoin Cash is. All right, so Bitcoin Cash right now is at $449. And I'm going to zoom out here. Right now I'm on the hourly. Let's go to the weekly just to see where it once was. I believe Bitcoin Cash was up around a couple $1,000s at one point. So I think it opened at $4,000. I wouldn't be surprised if we see $4,000 on this next run, roughly a 10x gain from where we're at now. I mean, you got to think, when I was watching some documentaries on Roger Ver, this guy was doing the exact opposite of what everybody in Bitcoin was doing. While everybody was making a ton of money trading Bitcoin or getting their money from whatever they had and buying Lambos, this guy was selling his Lambos to buy more Bitcoin. So he was already fairly wealthy. and he went and capitalized. He saw where the market was going, invested a ton in Bitcoin, became a billionaire, also started Bitcoin Cash. And, looking at this chart here, I mean, you're basically just in an accumulation range right now. This is all accumulation right here. And I see that, I think his targets are probably fairly conservative. I would be looking at a 4,000 Bitcoin Cash. Because if you look at some of the previous bull cycles, a lot of times what happens is the coins that have pumped will do 10x the previous all-time high. So for instance, for something like Ethereum, which was roughly $1,200, I would anticipate it going to roughly $10,000 on this next bull run. Something like XRP, roughly $3.80. If that goes 10x, you're looking at roughly $38 this next bull run. So for Bitcoin Cash, it's very well possible if they were opening at $4,000, and let's just say they go from $2,000. Let's just say that opening was a little high, and they're just going a 10x from $2,000. You're looking at roughly $20,000 Bitcoin Cash, which would make sense if Bitcoin starts hitting some of its predictive prices, especially from JP Morgan pulling out $146,000 price prediction. It wouldn't surprise me one bit if Bitcoin Cash got to see some of those levels, around the $20,000 range. So interesting to think about. Definitely going to keep stacking. With that being said, I think that'll do it for this recap for Friday, January 8th. If you like what you heard, please drop us a like and a comment, and we will catch you all in the next video.